Kind of an interesting matchup here, not necessarily on the field, Rashaun, but really kind of, I guess, in the bank accounts, if you will. We know the Patriots are already one of the most valuable teams in the NFL. And I know the Seahawks are somewhere like 14th, 15th ranked, but everyone's saying that if they actually strike a deal, this is actually probably going to be the biggest the NFL has seen. And it's kind of interesting that it's coming right after the Super Bowl, potentially. So does a win potentially help the valuation there?
Well, whether they win or not, this is still going to be the biggest deal. And whoever buys this team is clearly going to be a winner. And whoever sold it, the estate, is clearly going to be a winner as well. I mean, you never really see two major things happening like this at the same time. But I was just listening to you. I'm getting fired up about it. I wish I had an extra $7 billion to buy it myself. So I'm excited about it, man.
Well, that's what I'm curious about, too. I mean, typically in the old days when, a team like this went on sale for a high value, there were usually a very small group of people who can afford it. Obviously, with the NFL loosening some of the ownership rules to allow private investors to come in and take smaller shares here, I assume that's probably going to lift this valuation probably more so than if just one single collective had to buy it.
Not really, because the rules stipulate that private equity firms can't be majority owners.
Oh, okay.
So I don't care how many private equity firms are in the mix. They can't buy the majority stake of this team. It has to be a family-owned business, and it's going to be an individual who maybe has a consortium of individuals behind him and private equity. But that individual is really going to strike the price, be the lead investor, and take this thing across the finish line. So it's not private equity driving this price increase. It's really the core fundamentals of these teams and of this league. And I'm talking about the biggest viewership of all time, the biggest sport, and the biggest game of the year. I mean, it's just perfect timing for them to put it on the market.
Yeah, absolutely. What a showcase, the Super Bowl right before the sale. I do want to talk about what we're seeing in the NFL when it comes to valuations there, when it compares to other sports, for example, which we know draw a lot of eyeballs. You think about basketball, for example, you think about Major League Baseball. Compare and contrast what you're seeing there.
Yeah, well, I can't speak in too much detail about the NFL because of my ownership in the Atlanta Falcons, but I can tell you it's actually very simple. And I want to draw a comparison to an industry that you guys know pretty well, software. So the reason why software companies trade at an average of 10 times revenue multiple is because of the annual recurring revenue stream that's growing at a pretty high CAGR against long-term contracts and has a moat around the business. Well, there's another industry that has a very similar revenue profile as software companies that trades around the same multiple as software companies, and it's professional sports teams. Sometimes 2/3 to 80% of the revenue stream is from big media and big sponsorships. So when you have that already baked out for 10 to 15 years, and that revenue stream is growing and they're diversifying into real estate, that makes this asset class very attractive to not just retail, high net worth individuals, but to institutional investors who are over-indexing in sports today and asking for more and more of it. But it's really about the moat they have around the business, the annual recurring revenue stream, and the product that they're putting out on the field or the court. It's just spectacular.
Well, forgive me if this is a dumb question, but you touched on something that I always wonder about when it comes to investing in sports, because I can get my mind around a software stock. I can think about the dividends that they throw off, buybacks, et cetera, and the stock itself going up. When it comes to, investing in a sports team, you mentioned, recurring revenue. What form does that take, and what are you receiving piecemeal versus, just being eventually able to sell this stake?
Well, thanks to the Atlanta Braves, which are a publicly traded company, you can actually go right through the P&L on the balance sheet of a professional sports team that is absolutely crushing it and see exactly what they're doing. So, for example, the Atlanta Braves went from $250 million in revenue to $650 million in revenue by transitioning their business model from just getting money from the league, media revenue and sponsorship revenue to also diversifying into real estate. So they own the stadium, they own the parking lots, they own the commercial and residential real estate, and they grew their revenue 250%.
Yeah.
So when you buy into a team, you're buying into a holding company that is becoming a media company that has a live event component of it, but they also have a real estate component of it. How many different ways can you monetize this IP that you have? And how can you monetize it 365 days a year instead of 10 days a year of your NFL team or 100 and something days a year if you were a baseball team.
So, Rashaun, I mean, the excitement that you have and obviously just the growth that we've seen in sports, I mean, it raises a big question just about investor access to this. And by that, I don't mean like the gigantic folks who can afford to spend billions of dollars on a team. It's one of the reasons why you have Harbinger Sports. I saw just, was it last week or so, you announced this deal with iCapital to sort of get into that wealth channel here. Are you seeing more individual investors and more, for that matter, the investment advisors pushing stakes, small stakes, either in the teams themselves or through some of the products that you yourself have through your business?
Yeah, great question. Sports today is where tech was 10 years ago from a liquidity standpoint. So just like 10 years ago, no one was calling you to advertise a $200,000 position in SpaceX or Anthropic. No one was doing that 10 years ago. How many of your viewers have gotten phone calls and emails about Anthropic and SpaceX and OpenAI, over the last 6 to 12 months? That market in tech secondaries is very liquid. In fact, 10 years ago, when I started doing late stage tech, there was no way to get into these things. Sports is going in the same direction. It starts out by opening the aperture to folks like private equity firms who then had thousands of investors underneath them who also want access. But you have to create the ecosystem that was already created, like in the tech marketplace, where you have these private marketplaces like Forge and Equities In and NASDAQ private markets and all of these brokers out here. And I think sports is well on its way, except sports has more price transparency. Everyone understands what the Yankees do for a living. Everyone knows the valuation of the Yankees, right? And there's already a built-in fan base. So I think the sports ecosystem for secondary liquidities will do better than even tech.